Vaibhav Kapoor, Chief Investment Officer with the IL&FS Group, joins us live with his market take. Vaibhav, good morning and thank you for joining us. Vaibhav, 3 months ago it was gloom and doom. Now suddenly everyone is of the view that it's clear blue skies. Do you think Indian markets have turned the corner?
Things are a little better, definitely, than what they were 3 months ago. I think all the actions which the government has been taking are just sort of beginning to have an impact. But to say there are clear blue skies, I think, is also not correct. I think there are still a few clouds around. We've seen some improvement or some hopes of improvement, but on the ground, I think it will take still some time and some more effort for things to start really showing improvement. I think we are still a couple of quarters away from that, and fortunately or unfortunately, in a couple of quarters or less than that, we have the elections, and therefore you don't know actually what the result of that is going to be, and therefore whether this momentum which the economy might just be, or the bottoming out which might just be happening, will continue after that or not. So I would say, yes, instead of the gloom doom, right now there is hope, but it's still hope largely, a little bit on the ground. We need to wait and watch.
Vaibhav, hi, morning. That's precisely the point, because what we saw yesterday seems like an extrapolation of what the market is anticipating, looking at the state elections, expecting what the general elections are going to be like. But from now up until, 5 months from now, when we do see an outcome of the general elections, we will also get some more clarity on what the taper talk is going to lead to. What's the sense that you're getting? Will we see a range-bound market with 6250, 6300 as a ceiling? Or do you think the ceiling could move much higher for the index from here onwards?
I think the ceiling could move a little bit higher, not much higher. Probably maybe something like 64, 6500, 6550 maximum. That's what I would think so. Because I think on the taper issue which you mentioned, my feeling is that you're going to see this taper pretty soon now, maybe not in December, but quite likely in January. The US data has been extremely strong. Yesterday we saw a 3.6% GDP growth rate in the third quarter. Today you have the employment data there. Last time it was strong. If it turns out to be strong today also, that will really set the case for a much earlier taper than what the market was thinking earlier. And if you notice, the global markets have already sort of started softening in the last 5-6 days, both in US, Europe and the emerging markets. And India has been an exception largely because of this political excitement which is there. But we know that sooner or later, the trend catches up with the rest of the world. So if you have positively perceived market results on Monday, yeah, you could get some 100 points, 150 points in the Nifty. But after that, I think you will, you'll go with the global trend. Also, one more thing, I think on the economic side, or the fundamental side, something which is still not sorted out and which is of very key importance is inflation. Inflation still continues to be very high, and if that continues like that, then you're not going to see lower interest rates. I don't think the RBI is going to lower interest rates if inflation continues to be high, and therefore this incipient improvement in the economy which we are talking about might not gather pace the way the market expects it to.
So Vaibhav, assuming the worst case scenario, that we do get clarity on taper, it happens soon next calendar year, and we do see an RBI hike as well this month itself. Could it lead to a big downfall in the market and huge amounts of volatility, or do you think both these events are somewhat priced in already?
They are priced into very small. I don't know about the taper. I don't think it's fully priced in because, as I said, we can see already the global markets beginning to react to it. Now, if you look at the index-wise, it's already gone up a fair amount. Even some of the beaten-down stocks have gone up a fair amount. So if you have high inflation numbers, you have an interest rate hike, and the imminent fear of taper towards, say, January, then, the 64, 65, what I'm talking about, is probably going to remain for quite some time. And you could see some corrections in the market. But I doubt if it's going to be very big like we had last time, because now there is hope both in the economy, and there are some fundamentals like CAD, etc., which have improved, and there also will be hope on the political side if these elections on Monday turn out to be way the market expects them to be.
Power Grid has been a dog of a stock. It has not really made a lot of money for institutional investors and for those who even bought Power Grid, IPO 5 years ago. What explains the underlying interest in this business?
I think 2 or 3 reasons for that. One is that the power sector itself has been out of favor, and we've seen a lot of problems in the power sector for the last so many years now. So that's obviously kept sentiment low. Secondly, by nature, it's a capital-intensive industry. You need a lot of capital, and therefore, generally, returns on equity, returns on capital employed are not too high. And requirement of leverage is high, so the debt equity is high. And these sort of companies generally, don't perform like, an ITC or, other FMCG companies where ROEs can be very high and capital requirements low. And particularly in the current environment, such sectors and stocks have really been out of favor. So I think all that explains really why returns have been muted.
Vaibhav, is the PSU banking pack a pie that you would nibble into right now? Because if and when the market does take off, banks too would be a big leg or would see a big leap.
I think so, yes. I think it's time to sort of start investing a little bit in the PSU banking sector, and particularly if you're bullish. I mean, if you really think that the economy is turning around and is going to do well, say even 6-9 months from now, and things are going to generally improve, then obviously the banking sector has to start doing better, quality of assets has to start improving, and a lot of these stocks are available at really cheap valuations, based even on net NPAs and 20% stress assets. A lot of them are trading at 0.7, 0.8 times book value. So yes, if you are positive on the market, I think this is the time to start investing in it.
So, Vaibhav, at 60 to 50 on the Nifty, to your mind, what exactly are markets pricing in? Do you think markets are already pricing in a moderate degree of recovery, some uptick in earnings and a big uptick in GDP?
I think markets are pricing in that the worst is over as far as the economic slowdown is concerned. They are pricing in about 12 to 15% earnings growth for FY15 and an improvement in GDP to maybe between 5 to 5.5% for FY15.
So now for markets to
and
go
yes,
up...
also a relatively and relatively political stability, which is very important.
So if anything goes wrong, which is if we don't get a stable government or a pro-growth government, if the GDP recovery is not strong and if earnings don't grow in the range of about 10 to 12%, markets could nosedive.
They could come down. I wouldn't say nosedive, but they could nosedive if there is a real bad political result of the general elections in April-May. Because I think these general elections are really going to be sort of a watermark as far as the Indian economy is concerned, and obviously therefore the Indian markets are concerned. If you have a complete mix-up of parties forming the government and you don't have any party having a substantial number of seats, yeah, then things can really get bad.
Okay, let's talk about the positive stuff then. Vaibhav, Indian steel stocks have almost doubled from the August lows. Anything that you like from that space?
I'm sorry, which stocks?
Steel stocks, the likes of Tata Steel, SS Sterlite, etc. have almost doubled from where they were in August.
Yeah, I think some of them were really beaten down. For example, if you see Tata Steel, it was really down to 180. The market cap was down to about 20,000 crores. EV/EBITDA was down to about, I don't know, about 3.5, something like that. So it was a real beaten down stock. We've seen some sort of signs of the global metals market turning around, partly because China has not slowed down as much as people thought it would slow down. And the US economy is, as we discussed earlier, doing pretty well now. The European economy is probably coming out of a recession stage, and therefore there is a turnaround happening in the global metal cycle. So I think if this continues, then over the next 2 years you could get a reasonable return from metal stocks. But having said that, of course, some of them have really gone up 100–120% right now, so you could wait for a correction and and add them to your portfolio.
Does one profit book from IT or start looking at names which have underperformed, HCL Tech or Wipro for that matter?
Yeah, I think the IT sector is going to continue to do well, and that again is based on the assumption that the US economy is improving and will continue to improve, and Europe will come out of the recession. Now, of course, we have this rupee issue. We've seen a little bit of appreciation, but I don't think that's important, because our base case is that even if the Indian economy, starts doing well and there's a good political stability, I think just the inflation differentials between India and the rest of the countries will cause a 3, 4, 5% sort of depreciation in the rupee gradually. So you don't have much to worry about there. So I think the IT sector remains a good bet. Again, of course, some of them have gone up a lot. Maybe you need to wait for a correction. It depends upon what your profile as an investor is. But you should definitely have some IT in the portfolio.